All right. I'm going to go ahead and get started and jump into our conversation today about leveraging stock intel. So, first off, thanks everyone for joining us here today. Look forward to these regular updates about the tape report. We're doing them on a fairly regular calendar every other week, so you can look forward to those in the coming weeks. And if anyone, of course, has suggestions about topics, I'm more than happy to do that. But generally, my plan is to continue along going feature by feature. And today's conversation is actually one of the ones that I've been looking forward to because it's a completely new feature that we have in here. And it very much is built out of a demand that I had as an advisor, as an options trader, thinking about the best, quickest way I can get quality information about a stock without having to research a bunch of disparate sources. And as we'll see, as we'll discuss a little bit more today as we get into this, thanks to AI, it's not just development that it's helped me with. It's not just, I don't let it do my writing, but I do let it do my research. And I do let it do that research in a confined kind of domain, in a well-structured environment with the data that I point it to and provide it to, and let that kind of consolidate all of the intel I have. And the goal here behind stock intel is to create focused institutional quality briefs describing what's going on with a ticker, what's going on with an ETF in that sector, and understanding through a couple different lenses and a couple different research focuses what's happening here. What does that mean for my strategy? What does that mean for my general objective with regards to the stock? So, without further ado, we will jump right into this stock intel feature. But before I do that, as I mentioned, I'm an advisor. And as you know, Harvested Financial is a registered investment advisor. And so nothing here during this seminar constitute financial advice. The only way you'll get financial advice from me is by signing a contract with Harvested Financial. We provide that advice manually through phone calls, conversations, but also, of course, through the tape report. So whether it's digital advice and you're signed up for the advice package there, or whether it's otherwise advice, that is the only domain you will get financial advice from me. Everything else is education and information. And particularly, don't take tax advice from me. But no, seriously, no financial advice. And this is all for educational purposes. So, as I briefly hinted at before, the goal of the stock intel feature is to turn any ticker into a source-backed, institutional-grade research brief. I like them to be brief specifically. The goal is for them to be only, between 5, 8, 1,000 words, kind of at the upper end, for a focused review of what is going on. If I'm going to make an options trade, what are the salient data points that I need to know? If I'm going to engage in a put selling strategy or covered call writing, what do I need to know about this stock? So, big question there. What data is important? And we focus on research, proprietary data, and a structured output. One of my actual goals in thinking about the output, I don't know if anyone has noticed when they read Bloomberg, Bloomberg News has a very consistent structure. They actually have in their style guide a syllabus, or I should say, a rubric for how they write a story, that there's always a headline, there's always a quote from this source, there's a quote from an alternate source. It's a very structured brief, and that makes reading them easy. You know what to expect. And so that's what I want to bring in stock intel is something that you can read and quickly digest all of the salient facts about that are relevant to what you're about to do. So it's all about finding signal in the noise. That's the golden goose, whether you're looking at data, whether you're looking at information, whether you're looking at highly quantitative figures or relatively qualitative news type items. So, as we'll see, looking at some of the different lenses, we think about questions like, is the business durable? We think about fundamental type questions. We prompt the AI to consider those elements in, as it reviews different facts and sources. Uh, but then we distinctly think about volatility related factors. So we think about whether downside skew is bid. Is vol rich? What does that mean for vol to be rich? We layer on a bunch of different facts and kind of contextual data points to answer that question of how rich vol is. As we get into more specific tickers, we might be asking ourselves the question of, is this just an idiosyncratic adjustment or movement in this name, or is this reflective of the broader market? If a shipping company is down 4% and the broad market is down 2%, we don't find that particularly crazy. But when things start to zig and zag, we want to start thinking about the data points around that name and not whether it's in the sector or whether in the broader market. So finding that signal and digesting that into a consolidated research report is exactly what Stock Intel does. So there are two layers to the stock intel report. And when you go into the stock intel section, you'll get prompted to answer two kind of uh, questions on two layers. The first is going to be the four different topics, and then the next is going to be the different lenses. So topics focus on what the content of that report is going to be, whether it's going to look at news and events and particularly hone in on any M&A action, any earnings releases, catalysts, recent developments, maybe analysts have upgraded or downgraded, events that are related to that particular ticker. We'll look at a topic like a fundamental research topic. So focusing on kind of those fundamental research items, margins, cash flow, look at the balance sheet. We go to the source for that. So we actually point the AI and its research to look at the Edgar filing. So, we're not looking at random news articles from, disparate sources. We look at the actual balance sheets that are filed with the SEC for the different companies. We have a technical focused lens or topic such that we can think about any of the numeric path of the stock, its relative strength, drawdowns, ranges, are there support and resistance levels, is there abnormal volume, any of the different kind of technical indicators that might be germane to that issue. And finally, of course, since we're options traders, there's a specific volatility lens where the research is focused on all the different indicators that are coming from the tape report. So that's an important thing to highlight and we'll dig a little more into sources later. But the content that is driving this report is going to come from trusted news sources, public databases like that Edgar SEC database I mentioned, and also a big chunk of it is coming from proprietary the tape data. So all the different indicators that I've built within the tape to track vol, skew, the relationship between the wings, the smile in the curve, time spreads, and how term structure is working. And those metrics, of course, relative to the broader market or SPY. So that vol lens is really that's the options trader's lens in a lot of ways. But volatility does creep its way into all the different topics that at the end of the day that those facts are going to come out no matter what lens you're looking at. There is always a kind of dose of vol because these of course are options traded focused. So once we have our topic, the next layer down is the lens. And so the lens is going to be what is the purpose of my research today? You might be doing fundamental research, but your lens is it just broad and general? So general research is just going to give you the top level of what's going on, the biggest, broadest picture. But oftentimes you might be looking up a ticker and it might be for a specific strategy. So, the long-term compounder lens that we have here is going to focus some of that specific detail more on business fundamentals, moats, pricing power, the durability of their earnings, and going again to trusted news sources to get this content for a strategy that maybe this is a long-term stock that you're executing an overlay on. Maybe, whether that be kind of a collar, whether that be a put spread collar or hedge roll product, or, the accelerant with skew prime, how is this ticker industry looking for the medium and long term? Another lens would be considering this for a hedging opportunity. That you might look at the market, you might be getting some signals from something like Risk Beacon, and you might say, you know what, I just have a SPY position, but what would be some of the signals out there that are suggesting, or what are they reading in terms of the need for hedging activity now, or potential signals to get a little bit more defensive with the activity. So if you get an alert from Risk Beacon, that's a great combination where you have your preset parameters from Risk Beacon that say, hey, skew just did this. Now it's time to go dig into a research report and get that analysis on exactly what's going on and give you the background and the information to potentially act on that trade. So the research lenses are very much about what you're going to do, whereas the topic is more about the, subject matter of that report, the topic. So some additional, strategy lenses. I deem the first ones more about research. These are generally more kind of long-term, big picture, whereas strategy, these are for that more actively traded position management, where whether you're going for conservative put selling, aggressive put selling, covered calls, are you looking for some more active trade management here? And let's guide that report towards a strategy that is based on active trading. So the volatility profile is one of the big chunks of data that goes in, and we'll talk a little bit more in the future about that exact process, but a big bucket of data that we put into the large language model is the volatility profile that is coming from the tape. So we're looking at the uh, surface of the option surface, the volatility surface. We're looking at the relationship between spreads. So when reports go in, the back end produces a whole bunch of crunched numbers prepackaged for that model to review. So all the summary statistics about term structure relative to SPY. We think about the vol regime. So if you picture all of the different indicators and Garch figures and relative strength numbers, all of those items that you see in your dashboard or in the vol cockpit in your dashboard, all of that is going behind the scenes into the research report. And so we're having the model analyze that for patterns. And as this fun little AI chart shows, like I said, we send surface, term structure, all the different fields, with some computed statistics, min max, percentiles, Z scores, change over X periods of days, volatility regime, all of that goes in as a big vol package. So it's not guessing in the background. It's not making up and hallucinating data. In fact, that's one of the guardrails we'll talk about is no fabricated data, only rely on stuff that you can cite and prove. All of that vol information from the tape is what's driving the vol lens and the vol context here. So, since we're trading underlying stocks, we also care about their price path and their momentum. So, in a similar manner to the way we kind of consolidate and package all these volatility statistics for the research report, we create a bunch of technical indicators and price relative indicators. So, this creates statistics about trend, about beta correlation, realized vol, drawdowns, range, all of those statistics are pre-computed from our data. So it's not going out and trying to answer this data question. We deliver it the data, and the edge that the model gives is a synthesis and report on the facts that we're driving it. Because, as I keep saying that, because as we all know, if we've used LLMs, if you've used any kind of chatbot or AI, it has a tendency to make some things up. And we fight very hard against those hallucinations by creating the data sink that is feeding into the model. Garbage in, garbage out, and we want the exact opposite of that. So, including price path and momentum and all of those technical statistics, those are also being fed in to produce the report. So guardrails, I sort of mentioned that before, but I think really the edge in this product and kind of the value that it delivers, as opposed to just pulling up ChatGPT, pulling up Claude, is that we've created a very defined set of not just data going in, but guardrails on what to do and what not to do. So, what specific sources we're looking at is incredibly important. That we trust newspapers like The Economist, the New York Times, the Financial Times, the Wall Street Journal. We trust sources like that as opposed to some of these remarketed sites or financial media sites and blogs that aren't quite as, certifiable. So, say what you will about, big media, that's a different conversation, but at the end of the day, citations and a trusted source of news or a trusted set of news sources is core in terms of the design and focus of the model and the model's research. Real data, getting all those vol figures and all those price figures in there as real as good as we can get, scrubbed and processed and, analyzed such that it's not only a relatively high quality data source. Our underlying data actually comes from ORAT, so I think is one of the best data sources out there. But getting good quality data in for our implied volatility, having the harvested set of indicators and suite of, metrics that we analyze, all of that real trusted data is what goes in, focuses on good news sources and source direction. And then finally, a guardrail that I have to say, as I said at the beginning, as good as this report is, or as good as I think this is, it is not financial advice. So it is specifically directed not to provide trade recommendations. And it's specifically directed not to say things like, seems like a good buy in Apple, but rather contextualize that and let you, the client, the user, understand everything that's going on, this being one of those, pieces of the picture, and make your own trading decision or subscribe to some of our automated strategies, of course. So not only do we focus on quality going in, but we have very strict rules on what it can and can't do and what it should focus on. So we've described some of these steps along the path, but here's another lovely AI generated, of course, infographic about what happens. Price path and momentum. We talked about including those figures. Internal data summary. These are all the vol indicators, the term structures, the percentiles, trusted external sources. Broker research was one that I actually forgot to mention specifically, but any source that is, a valid source that you would trust reading. Um, Focusing on that topic. So focusing down into what general, big picture subject do we want to detail here? Layering on that research lens. What is the objective of our trade today? Is it trying to find or trying to understand the risk factors in Apple if I want to sell puts on Apple? Or is it understanding the risk factors in Apple because I think it might be time to hedge? Or as a long-term compounder because you're executing skew prime or the wheel strategy or something like that. So given all this information, how do I want the report to, or what objective is this report targeting? Finally, those guardrails and crunch, 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 we get a very structured output. I referenced the Bloomberg article and that my goal is to have a very, predictable way to digest a number of different topics that are going to be relevant. So I mentioned that reporting structure, and here are some of the items. And we'll show some real reports right after this. We have the bottom line, which is ironically coming right at the top. But that's really, if you're going to read two sentences, what is the key subject matter or key summary of this report? We have a data summary, and these are specifically designed to be evidence-based bullet points. We have the risks. So risk factors that are happening because no matter what trade you're going to do, even if you're selling puts on the most durable, high or deep moat, deep wide moat company, there are going to be risks. The current setup is a cohesive interpretive paragraph about that steps a little bit beyond what the bottom line says, but it gets all the way to summarizing this and not quite financial advice. We look at what's changed, and then finally, any sources and gaps. So those guardrails are not only designed to say, hey, only stay in this lane, but think about what's missing. Think about a data point that you would have liked to have, but is not here. We want to specifically think about that. So when you are reading this report, you understand what it's missing. So here's a sample and I'll go live, but highlighting some of the integrations. Another point with this research report is that, of course, you're using this because you want to make a trading decision or maybe just understand what's going on. But broadly, the next questions are probably going to be something like, well, how is that skew item behaving over time? That's why we have a link to the indicator chart. We have a quick link to a stock chart. And finally, to the extent that you're interested in Tesla and the volatility and as a hedge candidate, well, directly a link to explore Tesla in the hedge roll product. So without further ado, I'm going to hop over and show some live reports. So stock intel exists in the strategy laboratory. This is available for all of our investor tier clients. So if you have the investor package, whether it's monthly or annual, or whether you have the advice overlay or not, this is one of the kind of sweet ads that we have, for those long-term investors. Here you'll get kind of some detail about, generally what it's analyzing. If we want to select fundamental, news, events, technicals, vol profile, any suggestions, maybe I'll just run a report here for everyone. Feel free to throw it in the chat. Spoiler alert, I have a Tesla, a Microsoft, an Amazon, and I believe a SPY as my samples here. So SBLK. Oh, that's a fun one. I nod to whoever set that. I like that. So let's do news and events. I think that's kind of interesting for this one. Oops. And I'm going to enter SBLK here. News and events. Let's think about covered call writing in this one. News and events, covered call writing, run. So here you'll get to the My Reports section. And it says reports are available for 30 days after creation. That's sort of the shortest timeline. To the extent that there's extra capacity, I show some older reports also. But fret not just because they're not immediately available here. For compliance purposes, I have to store them all, but that also means that I could always retrieve them for anyone to the extent that there was an older report that you were interested in for some reason digging back up. Because we're actually, engaging a large language model, this is, processing the report takes anywhere between 90 seconds and maybe 3 minutes. It all depends on sort of how busy the server space that we rent is, and churning through all the different, whether they're the indicators or whether it's the research, all that takes a couple minutes. So what happens is you will get an email once your report is done. So feel free to browse around, look at some other stuff, or just come back and check in. So actually, that already finished in SBLK. So, yep, it looks like that only took under 2 minutes for that to complete. So SBLK news and events for covered call writing. Bottom line here is interesting, or I'll kind of summarize that. For example, SBLK's recent setup looks more supportive of income-oriented positioning than of an open-ended upside chase. Management has already delivered a meaningful Q1 dividend, reported profitable Q1 results, and has not yet publicly confirmed a new earnings date beyond the last scheduled release cycle. The main covered call risk is not near-term corporate surprise as so much as dry bulk rate volatility and transaction-related optionality tied to vessel acquisitions and broader industry consolidation. So some of those later term facts seem would be probably a little bit more relevant to implementing a systematic covered call strategy as opposed to in the near term. But one of the things that you think about with a covered call strategy is, one, if I'm thinking about the risks, it's the downside risk. It's the risk that stock goes south and you only collected a little bit of premium and you're basically an equity holder with a small extra payment. On the upside, your risk is that things go incredibly well and you gave away upside for less than it ended up being worth. So the specific point here, more supportive of an income-oriented position than of an open-ended upside chase. It'll dig into a little bit of the facts in a second. I'm curious what those point to, but that's very relevant to thinking about a covered call. Is there a risk that there's some big upside event? And for bulk shipping, dry bulk shipping, I think, to the extent that we think about, what's going on there politically or what this references within the industry, it's the downside that's probably the bigger risk. So that to me says interesting covered call candidate. Of course, depending on pricing, um, we get some profits, figures, 50-cent quarterly dividend, reinforcing that yield story, again, positive for covered call type focuses. Um, the recent news flow does not point to an obvious imminent upside shock. But freight market sensitivity, is the key reason. And obviously, with everything that's going on politically with the Strait of Hormuz, shipping is in question because of that. So, we talk about some recent acquisitions from them, going back the last 2, 3 months, the risks. And then again, so important to me, I spent a bunch of time as a journalist, and the citing your sources really matters. And it's something I always insist on AI doing to the extent that I'm relying on this. We're going after some pretty credible sources here. The Starbulk dividend policy page, their press releases, their SEC and Edgar filings, an official NASDAQ press release. So, you know, nothing here is just going to be invented out of nowhere. It's very focused on that candidate. So, this is very much a kind of strategy focused report. If we look at Tesla from a vol perspective as a hedge candidate. So, kind of the combination we're going for here is you might be a Tesla holder, whether that's been long term or short term or however long you're planning on holding. Given what's going on now, I don't know what's going on now with Tesla in full disclosure, but I'm running this report. I'm thinking about, is this a time for me to hedge? Um, and the content is Tesla's options seem less like a broader fear regime and more like a stock with elevated realized movements. So it doesn't seem like the type of thing that is specific issue related. Of course, there's a lot of macro backdrop that might demand a hedge, but here we get some detailed vol figures in that suggesting that actually implied vol is cooled. We compare it to, here we go, to SPY. And so it's Tesla's lagged SPY over 30 days and 90 days. So that, those technicals are actually weakening the no hedge argument, which we were getting given some of the softening vol readings above. So it takes a very nuanced approach. And, part of that instruction, part of the design of this model is that we want to think about each data point independently and let those contribute and paint a picture about overall what's going on. If you notice some of these highlighting, we'll get, some glossary items. So to the extent that, we all know what at the money vol is, but smile and bend, those are less common items, and having them specifically defined is nice. The speaking of which, I just real quickly speaking to definitions, I recently added, and you'll be some of the first people to know and see this, a glossary to the dashboard. That there was no, there were a lot of tooltips all around the site, but I consolidated all of these in one big glossary here. So really, that's what we've got in the stock intel report. And like I said at the very beginning, this was something that I built for myself because I want to be able to scan 800 to 1,000 words, very focused research from sources I trust to understand what's going on in a specific ticker. Whether that's something that I'm reading about in the news, whether that's something that a client will come to me and ask about, this is consolidating all the data that I built and all the indicators that I have and surfacing the ones that are most interesting. So of course, this is AI, and a lot of the disclaimers around that don't read everything you believe on the internet. But we did put in a lot of guardrails. It's worth checking, of course, always, some of the sources and the claims at the bottom. But the other kind of good do your own research element to this is to the extent that some of these vol numbers are coming across, it's hard for a specific sentence to explain exactly what's going on. So I definitely point everyone to the indicator chart. And this is available to everyone with zooming the wrong way, with the Edge screener or in the Edge screener in our analyst package. So this is a good kind of, which is why there's a link to the indicator chart. This is a good complement to that. So it looks like I actually have SPY up, but if it's talking about skew 30 readings being at the lower end of their 30-day percentile, well, just about where are we? 3.2%. That's the difference between the call or the put minus the call. So a positive 3%, 3% askew. Where does that actually sit? Well, we see as recently as March, it was getting up in the 8.5% range. Last April 2025, we got as high as 13%, just under 13%. So what does that 2% mean, and help to kind of visualize, we're all visual learners, what, that 85th percentile or 90th percentile or whatever it might be, actually, it looks like. Just a quick, promotion. There are tons of different vol indicators in here, all different tenors. So, we could look at it at 30 days. We could look at the skew 30 at 30 and 60 days. So same 30 delta measure, just at a 30-day expiration versus 60-day expiration. All kinds of liquidity indicators, looking at the width of the markets, volume, bucketed into all different at the money buckets, wing buckets, a lot going on in here, and we'll definitely do a future webinar on this. But since we're just crossing the 30-minute threshold, and I always like to keep these short and sweet and focused, I will open up the floor for any questions. Um, can you explain again lens versus topic? So it's definitely a little bit nuanced, and I might not always be the best at naming these items, but the topic, I would think of them as two different knobs to dial in what the content of the report is going to be. So, topic, I would say, more relates to the subject matter that's going to be in that report. So, is it going to be more focused on volatility items? Is it going to be more focused on technical items? Is it going to be more focused on news items? So a report that is about, Apple and news events, you're going to get news about what their last earnings were doing. You're going to get news about, a big product release that they have. Whereas the vol content will be more about what the relative, at the money vol level is to now versus 30 days, and whether that's higher or lower than SPY, and whether skew is moving in any interesting ways. The lens is then more about that, what am I going to do with this? That, okay, we're talking about news and events, but I'm interested in selling puts. And that should be a slightly different lens on that information than if I want to sell calls. Puts, I'm concerned about catastrophic downside. Calls, I'm also concerned about catastrophic downside, but I care about the upside. Puts, you care, in the short term, that aggressive put selling, you care much more about near-term event risk. So, vol profile for conservative put selling is probably going to be looking at more longer term structures. It's going to be looking at further out of the money, perhaps. Whereas the aggressive might be thinking about the at the money ball and near term events if we're talking about a news and events topic. So two different layers, two different filters on what that content should be. And I'd very much encourage you to run a couple examples of, meta with a vol focus, meta with a news focus, and see kind of how, some of the information will of course be the same because meta's meta, but I would encourage you to compare, to get kind of a handle on those. And I'll also say that these are a constant work in progress, that reviewing kind of the prompts and the model design and the guardrails and the information that goes into it, reviewing all of those things is kind of part of the ongoing maintenance. This is very much, a garden that needs to be tended. It's not a building that is built and forgotten. So if anyone has any suggestions or sees any funky things or likes the idea of a different topic or lens, I'm all ears and would love feedback on that. Speaking of feedback, now's the time when I plug a bunch of different items. Go to the tape.report, check it out. If you have feedback on any of those items, stock intel, any edge screener, expensive calls, puts, any of the indicators, what they mean, I love hearing them. I love hearing questions. You can also send an email to me, mark@harvestedfinancial.com. There is a feedback form right in the dashboard also. You can check me out there. And of course, join our Slack if you have not already jumped in there. It's a good conversation. It's a great place for bug reports. It's a great place for learning about new features, posting reminders for these lovely webinars. And of course, sign up again for our webinars. You'll get an email. I plan on doing these every 2 weeks or so to continue to highlight a bunch of the features in the tape. So let me know what you're interested in. Thank you again, everyone, for joining. And I will sign off with happy trading.